My guest today saw gold price rally even before it happened. So what does he think of current market conditions today? Joining me today is Sean Boyd, CEO of Agnico Eagle. Sean, good to have you back on the show. Thanks for being with us.
Yeah, good to be here.
I'm sad to have missed you last week in New York City, but we're gonna talk about that in a bit. But first, we spoke last in March, where you had correctly called the bottom of gold prices. Where do you see price levels now? How's gold looking to you now?
I think gold's fine. I think when we look at the current gold price, a little over $1,450, I think it's actually doing quite well given where the general stock markets are. And we're still in that bull market that started in 2015. This is just the initial phase. We had to get through 1360, 1370. We did that. We're consolidating here. As we've always said, we think in this cycle, we will see gold hit a new high in US dollars. So ultimately we get to 2000. May take 2 or 3 years, but I think gold's doing really well at these levels.
Okay, so that's about a 30% increase from where we're at now, which is not improbable, right?
I think that's the kind of neat thing about this is that even 1450 is not a high price for the gold mining industry, and 30% up from now is not a crazy idea. So as we've said all along, gold's hit a new high in most major currencies except one, the US dollar. So I think it's reasonable to conclude that at some point we reach a new high here in US dollars.
And you know, many would say 2019 has been a great year for gold prices. Some investors wanted to see higher highs this year, but have elevated price levels changed Agnico's budget for production in 2020?
No, we haven't changed our mine plans at all. In fact, from a reserve price perspective, we'll still be fairly conservative at $1,200. So we don't need a higher gold price to run a high quality business. We're still investing in the project pipeline, but we're nicely positioned because we can still see growth in production over the next several years, largely on the back of 2 new deposits coming into commercial production this year in Nunavut.
And I guess from the eyes of a very well-respected CEO in the mining sector, Sean, what's your take on the mining sector overall? You know, if we look at financing for the junior miners, especially in Canada, many had anticipated that with the gold price rally this summer, that sector would have picked up. It has not. It has been flat. Why do you think that is? Is the gold price just not high enough yet for the juniors?
Yeah, I think the gold price is just not high enough to attract a lot of new money into the space. And I think as we've mentioned before here, we started to see more generalist money start to look at the bigger, higher quality gold miners a couple of years ago. So this is still early. We're still not at a price level in gold that's going to draw a lot of interest or a lot of attention, but the investors are clearly out there doing their homework, and they're certainly out there, we think, doing that work because there's an expectation from them that we'll see higher gold prices. So these things tend to take time, and I acknowledge and agree with you that investors thought we'd move up in the gold price a lot quicker. We actually think it's healthier to move the way we've moved, break through that resistance that lasted for several years at 1360, 1370. We got over 1500. We've moved back a bit, but all of this is healthy. We want it to move steadily up, and eventually people will return to the smaller players to get that leverage and torque that we normally see when gold's moving up.
Besides a higher gold price, a lot of people also want to see a major gold discovery, one that we haven't seen in years here. What do you feel it will take to get the next big gold discovery? Is it just, we're not having enough exploration right now? Does that discovery even exist? Is there just too much M&A activity and we're not focused on finding this discovery? How do you see things there?
Yeah, I think the challenge is for the junior space, they just don't have the budgets to do the consistent high quality exploration that they need to do. So that's certainly hurting us from an interest and excitement point of view in the junior space. But this is long term. A lot of the people that run these exploration companies have seen this before. They need to continue to be patient, spend the money in the ground. There are discoveries out there, but as you said, you never know when they're going to happen. But if you're not drilling, you're not going to find anything. So as an industry, we still have to continue that steady investment in exploration. I think you touched on M&A. There's likely going to be continued M&A. There needs to be continued M&A. So as long as it's smart M&A, I think that'll benefit the industry. But what we need to do is just, as an industry, stay disciplined. We don't want to start becoming undisciplined and turning off those investors who are starting to warm up to the space again.
Finally, Sean, let's talk about Agnico. You were in New York City last week, ringing the closing bell, celebrating 25 years of the company being listed on the New York Stock Exchange. Tell us about that celebration.
Well, that was fun. The nice thing about Agnico, over our 60 years, we've always been focused on telling our story in the U.S. Prior to our 25 years on New York, we were also on the NASDAQ, one of the first Canadian companies in any sector to be on NASDAQ, and that's likely why our biggest single investor base is in the U.S. So an important market for us. It was an exciting time. We had our board of directors there. We had a meeting. So sometimes you got to take a step back a bit and celebrate the success, and we certainly enjoyed doing that last week.
And you've just achieved commercial production at Amaruq up in Nunavut. What are your plans for 2020? What are the next steps for you guys?
Well, steady growth in production again, and we can see growth, steady growth beyond 2020. It's just ramping up production, both at Meliadine and Amaruq, and then taking advantage of opportunities that we see to do a bit more at Meliadine by accelerating phase 2, building some open pits, and now we're looking at Amaruq underground as an ability to augment production there. So our experience tells us that the heavy lifting is usually getting these production platforms up and running. The real value creation comes once they're up and running, so you can do consistent exploration along the belt. And as we've said before many times, that's why we like Nunavut. It's got tremendous geological potential, but it's also a place you can do business. It's dramatically underexplored, so we see that being a really important part of our business for many years, and we hope there's more discoveries up there.
All right. Sean Boyd, thank you so much for joining us today. Continued success and happy holidays.
Thank you very much.
And thank you for watching. We will have much more for you, so be sure to stay tuned to Kitco.com.